This episode is brought to you by Arkham. Arkham allows crypto traders and investors to look inside the wallets of the best traders, largest funds, and most influential players in the crypto markets today. We'll hear more about Arkham later in today's episode. Quick shout out to Permissionless 4 coming this summer to New York, June 24th through June 26th. We'll have speakers from all across the industry, including Hayden Adams, Kyle Samani, Guy Young, and more. Get your tickets today by following the link in today's show notes, and make sure to use code BELL10 to save 10% on your purchase. See you there. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. Hey everyone, this week's episode is a cross post from Lightspeed. We discuss Solana's bug fix, Ethereum's pivot, Solana's DEX landscape, and more. Enjoy.
Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, alongside Mert Mumtaz for a weekly news roundup. Mert, how's it going?
Going great. How you doing, sir?
Doing pretty well myself. Good to be back behind the mic with you. It's been a busy week. Lots of interesting stuff to dive into here. So earlier this week, or I guess at the end of last week, we learned that there was a bug relating to zero-knowledge proofs that Solana, Jito, Anza kind of reached out privately to validators and worked together to patch in mid-April, and they released a post-mortem of that bug. So, this led to, predictably, some online controversy and centralization criticisms. So, Mert, maybe just walk us through what was the bug from a validator perspective. How was it patched? What was that process like? And what were just kind of the general takeaways there?
The bug was around the confidential transfers / balances feature on Solana, which is relatively new. It's been around for a while, but it got some new upgrades. And basically, there was a bug where you can mint more tokens on token 22 type tokens on Solana that use this plugin. Now, to be clear, there's not tokens that use this today. Not that I'm aware of, at least. It's a very new, unused type of thing. And so there was a bug in it. And so what happened was, Anza, Solana Foundation, Jito, and just even other people in the ecosystem, once this issue was found, then it's a security. Well, it's certainly people's funds aren't at risk because this wasn't used, but they could have been at risk if this was used. And so the proper way to do this in any software system ever is to disclose it privately and then take the proper measures to patch the issue. And so that's what happened. And I think this happened throughout a few days. We found out about it a while ago, and then by the time it went live, it had been a few days, I think. And yeah, you look at the patch, you verify that it works, you verify that it's not doing anything else, and you see the verified hashes and all this stuff on Twitter or whatever channel that people use, and then you just release the patch. And so that's pretty standard practice. This happens in all ecosystems. It's happened in Ethereum as well several times. Now, Ethereum does have the saving grace that it has multiple clients. So a bug in one client is not as important as, let's say, a Solana, because Solana has roughly one client. Maybe you can squint and say two with Frank and Dancer. And then, yeah, of course, the criticism was pretty expected from people who don't actually understand anything, which is, oh, well, this is centralized. Keep in mind, this is the people who were also criticizing Solana for not being able to pass 228, which I don't know how that didn't pass, and Solana is extremely centralized. But I think it brings out a good point of discussion in that people conflate disorganization with decentralization, or not being able to execute, or just having different incentives with decentralization, which is just as wrong as thinking that just because you're centralized, you can move fast. right? These things are, you can certainly say they're related in some form, and they certainly can be, but to say that one implies the other is a very weak claim that doesn't make sense, right? So if you have 1,000 node operators and they all have an issue that they're aligned on fixing, which is, if we don't fix this, we're all going to lose money. Okay, something like this. Then yes, they are going to coordinate to fix that issue, right? Because they have the same alignment, same incentives, and there's no real debate about this. It's not a controversial take. It doesn't require diversity of opinions or thoughts. It's just fixing a problem, which is the network will be hacked or something like this. And so that's just aligned incentives, and it's just the communication is, like some of the criticisms I saw was like, well, if this was Ethereum, it would have taken more days, and like the communication channels would have been different things. And I don't really understand those criticisms. Like, first of all, I'm not sure why the medium matters. Like, people can coordinate on whatever medium they prefer. It wasn't just on Discord. People run Signal, Telegram, all sorts of different things. So that's just not correct. But then more importantly, that being slower to patch is not a good thing, right? If you have a critical issue and you take 5 days to fix it because you're disorganized, but you rebrand this as decentralization, well, you just got wrecked, right? Like, now, of course, Ethereum is more decentralized than Solana. Nobody's debating this. That is correct. The issue is when you say that, well, they coordinated efficiently on a security flaw, and as a result, they must be centralized. Well, that's not what that means. Centralized means single point of failure, right? And then people predictably started saying things like, well, if they can do this, imagine what they can do. They can just confiscate your funds with like a letter from Tolly or something. And it's like, okay, again, one, Tolly couldn't even push 228 live, right? And I was even pushing that live, and same with Multicoin, right? And that somehow didn't pass. And so that's objectively incorrect just by evidence. And that's also not how a blockchain works. Like, you can't just confiscate somebody's funds, right? Like, you just need one person, one node to detect that, hey, this is not correct. This is not how the state transition is supposed to work. As a result, then what happens is a social fork or something like these lines, which has happened in all other ecosystems multiple times before, by the way. So the TLDR on my end, it was a bug. It got patched. It being patched fast led to people thinking, by the way, it wasn't that fast. I mean, it was still 2 days. It being patched that fast apparently makes people think it's centralized. But really what that shows is that the node operators are super active and involved in the network, right? It's the same thing as what happens, or what used to happen in 2022 when the network would go down. You need fundamentally the people to be actively monitoring their nodes and being like, okay, this node is down, I need to restart it, right? And this actually took much longer than that. So I think just my problem with it is people conflating efficiency with centralization. That's just not how it works.
Mm-hmm. Yeah, I mean, continuing with this is a precedented response to a bug. Even Bitcoin, the immutable Bitcoin in 2018 had to patch a bug by, privately reaching out to mining pools. So like, this is sort of a common way to deal with bugs in even blockchain systems. It's important to note. I think as well, like talking to, I talked to a couple of people who are involved in the patch process, and it's a little messy. Like, to my understanding, Jito, the foundation, Anza, they have like DMs, emails, Discord, all these different platforms and ways that they can reach out to known validators and send them this patch. And then a bunch of people will tweet out like a hash, which I guess is like a hash of the binary of the patch to prove that it's the correct one or something like that. But that to me is actually like, if you look at Solana as the future rails of the financial system, that's actually a pretty messy way to deal with a bug that would let you mint unlimited tokens or I don't know what the other potential outcomes were, but like there was this argument that Solana is centralized, but I actually think that like response like protocol is a little too decentralized. Like maybe there needs to be a better, more standardized way to like privately contact validators than, hey, we're just gonna DM you however we can, and then I think Lucas from Jito, his bio for a long time was like a hash that was related to this bug, so everyone kind of knew that there was some kind of patch going on. So maybe it's not maybe it's not centralized enough even for what Solana wants to be in the financial services world.
Yeah, I think, and I made this argument after 228 too. I think the much more real concern is perhaps that the network decentralized a little too fast for where we need to be. Like there's still a lot of things that need to be going into the network to improve it. And fear of idiot comments from people who absolutely have no idea how this works is just not very useful. And to their credit, I think there was a lot of people who actually work on the protocol in Ethereum who were like, yeah, this would also happen to us. But it's generally the typical types who don't really know anything except seeing the charts. Those are the types. And I mean, I think, and then Dan, who's not here today, but he made the post where it's like, okay, well, what's the equivalent number of entities that you would need to get a hold of on Ethereum? And it was actually quite comparable. I think it was something like 60 or 57 or something like this on Ethereum. On Solana, it's probably less than that. But it's not like much less. It's not like a 5x difference. So Binance, Kraken, Coinbase, etc. alone on Ethereum, it goes a long way to fixing something like that. But so the biggest interesting technical point is this is the point of client diversity on Ethereum, where if there's 4 different clients and a bug that's, let's say, something like this on Ethereum would not affect the entire network. It would affect that client. This has happened on Geth. A few months ago, actually, there was a DDoS bug on Geth where they need to coordinate with the L2 teams privately to roll out this update. Now, obviously, that's a different thing, but like this happens all the time. Ethereum saving grace is just a diversity thing, where Solana obviously doesn't have that today. But who knows? Maybe with FireDancer, and then as more activity goes on chain, this could be something that also comes to Solana. The point is, the discourse should be around client diversity, not centralization or decentralization.
Arkham was created to make blockchains human readable and simplify blockchain data so that it is meaningful and useful to the average crypto user. With their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. To get started, follow the link in the show notes below. Today's episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger is trusted by 7 million users, secures 20% of the world's digital assets, and remains the most secure hardware wallet for your crypto and logins. Follow the link in this episode's show notes to grab your Ledger today.
Look at you, Mert, being very kind to Ethereum. That's growth right there. But since we've said nice things about Ethereum, now let's say less nice things. I want to get into Ethereum's alleged turnaround, which seems to be, or the pivot, I guess is the word people are using, which seems to be the talk of the feed this week. It's a little strange to me just because a lot of this stuff has been a long time coming, but it just seems like there's a lot of interest right now in the new co-executive directors of the Ethereum Foundation, which, why do you have co-executives? Claim like promises to scale the L1, Etherealize, which is this maybe more institutionally focused entity, I think being led by Danny Ryan and some others. And just this general sense in the Ethereum world that it's time to pivot. It's time to make ETH the asset useful again. Make Ethereum learn to scale the L1. Here's the overarching question, Mert. Can ETH make this pivot? Like, is an ETH pivot to being a performant L1 and getting back lots of the app activity and revenue that it's basically lost over the past couple of years with the roll-up centric roadmap? Like, Can ETH pull this off in your view?
Well, there's a few things. One is I find it fascinating that they were actually reluctant to call it even a pivot. They were like, well, that's a prioritization, which like, okay, dude, sure. Can they pull it off? Well, I think depends what exactly we're referring to. If we mean that they can actually scale the L1 more than it is scaled today, then yes, they can certainly do that. Although I do think the discourse around this severely underestimates how hard that is, because we know a thing or two about scaling L1s, and it's not going to be as easy as a nice roadmap. It gets pretty messy when you scale things. So I think it'll probably take longer than they expect. And so then the question is, well, is this enough to turn around ETH, the asset? Okay, because people do refer to different things here. They can mean just the price action. They can mean the actual usability of the protocol and actually the revenue capture of the L1. Or they can mean something like, more institutions, more whatever. So it really depends on the preferred outcome. If the outcome is price action, I think the narrative of we will scale the L1 is probably enough, because obvious reasons in crypto, what you actually get done doesn't matter too much as opposed to the narrative, right? If XRP can get the price action by just telling the story, Ethereum can certainly get better price action by just telling the story of, well, we actually will scale the L1s or something like this. So that part seems to me obvious. The second consideration is, will it be enough for the L1 to actually support activity? And I don't think that's going to be the case, because that's not enough to just increase the limits. You also need to take fee markets and state contention and the types of those different applications that would deploy on it into account, right? So for example, maybe instead of $50 or like $200 extreme congestion fees, you now get $5 to $10. And it's like, is that enough? Well, it's maybe enough for some things, but it's certainly not going to be able to compete with anything like Solana, even at that case. Because you must also remember that Solana is also scaling the L1 while Ethereum is just pivoting to it now, right? I mean, the Agave 2.2, which just went live and will activate this feature soon, we're increasing the block space by 20%, right? And the goal is to double it by end of year. So it's not this isolated environment anymore where ETH is the only player in town. You now have to compete with the L1s, but you also have to compete against your own L2s, right? Because as an app developer, you just got to look at the math, right? If you can just extend the asset from the L1 to the L2 and then save, an order of magnitude on fees, depending on the app, I don't think that all apps kind of need this, but depending on the app, that's a very attractive proposition. And so I don't think it's really possible to tell if this will work for getting activity and hence revenue on ETH-L1 back again. But I think it depends on who you talk to. I'm not even sure if that's the intention. It seems like people are just upset at the price and they think this will help it, which I think this actually would help it. But I don't think when you come down to the physics of it and you actually have a world where there's activity on chain, I don't think it's going to be enough for that part specifically.
Mm-hmm. There's a lot there. I think one piece, Mert, is I understand what you mean, that narrative is almost more important than what you do in certain senses, Ripple being a great example of this. But it also, the amount of revenue that you're able to generate from people using the blockchain also does matter, because ETH, just the price has not meaningfully pumped in this whole cycle, really, especially compared to Solana, which has gained, the Sol ETH ratio is at all-time highs and continues to set all-time highs. I think partly because Solana is just a more useful network right now, and there's no real underlying fees to justify the price of ETH and the market cap of ETH. So the narrative matters, but I think there's also, I would think that some of the poor Ethereum price action you're seeing is like an admission from the market that, hey, we need to see actual fees. And if you just offboard all the usage to L2s and only charge them this like very small price to per kind of dollar of value in terms of like the blob fee they have to pay, we can't justify ETH at $4,000 or something like that, which I don't even know if it ever crossed 4,000 again this cycle. If it did, it was certainly brief. So I think that the meme is only going to last you so long. My skepticism about Ethereum's ability to pull off this pivot is that they're not going back on the rollup centric roadmap, which seems to be like that was where these conversations began, was people started saying, hey, I think these L2s are parasitic to Ethereum. The L2s take a lot of value. They capture value in terms of sequencer fees, and then they pay this very small amount in blob fees. And if you don't start taxing the L2s, or I think Max Resnick went on Unchained and was talking about like just like kicking the L2s out completely, saying, hey, like, thank you for your services, but we're good. Short of really extreme moves like that, I don't see how Ethereum turns things around at this point. That's where a lot of my skepticism starts.
I think this also gets misunderstood somewhat, but for an L2 roadmap to work, you actually do need the L1 to be useful. So when people say, well, if you're scaling the L1 now, you're giving up on L2s, that's actually not technically correct, because the point of an L2 is that you have valuable assets on the L1, and then you can extend those assets trustlessly or in a trust minimized way to the L2, right? Otherwise, why would you build an L2 on top of that L1, right? Now, you might say something like security, but that's just a very vague concept that also doesn't hold in reality, because these are all in stage 0, stage 1. So the most important reason is to extend the assets of the L1. This is also why I think Bitcoin L2s could be very interesting, because Bitcoin, the asset, is a strong asset in many regards. And so if you're an L2 that can actually extend that such that people can do things with their Bitcoin, that's interesting. So with Ethereum, it's the same, because Ethereum does have the most liquidity and the highest TVL and all these things and RWA stables, all this stuff. So it does make sense to build on top of it as an L2. But if the L1 sucks so much that either the L2s are the asset issuers themselves, or the L1 just loses all the assets, well, then you have no real purpose to be on top of that L1. And so then, the rollup centric roadmap, let's say, also has another hole in it. And so, and I said this, and people were like, oh, well, with Solana L2s, that's a sin or something. I also think this is why it, and we'll get to my other comments about decentralization and performance, but I think the L1 that's the most performant will also be the best host for L2s, because assuming it's the most performant, presumably you then have the most activity on it, which means you have the most assets on it in some regard. And for the use cases that you cannot do on the L1 with those assets, that's when you would extend them to the L2. Now, the alternative is you can bridge them to another L1, but like now you're just playing semantic games on bridging. But so like Magic Block is a good example of this, where you can use the fast block times of the L1 to do things that are not really possible on the L1 on an L2, but then just keep the execution back on the L1. And the benefit is you still get all the, let's say, meme coin liquidity that's already on the L1. So I think that actually is the correct way to do it. But I think it's just going to be a little too late for them to meaningfully scale the L1. Now, the only way that I think this works is if the existing network effects are strong enough, the liquidity effects are strong enough, such that it just does not migrate over in a period of, let's say, 4 years. If that does not happen, then I think they have a real shot.
I do wonder as well, like, scaling the L1 sounds nice. And as you explained, Mert, there's real reasons you would want to do it. It's not just entirely like a narrative game of, hey, we have Solana at home. Like it does meaningfully benefit the usability of the network. But if you look at the new Ethereum co-executive directors, first of all, the fact that it's co-executive directors did not inspire a lot of confidence for me. Companies don't appoint co-CEOs. It's not a good way to do business in general. Ryan Connor from research here tweeted out, like, in all of the public comms from the Ethereum world, you'll never hear the word revenue. It's just not a thing that they like to talk about. But at the end of the day, it's like the Ethereum community, so to speak, is upset because ETH, the asset, has not meaningfully increased in price. That's because the L2s are making all of the money, because people are not paying nearly as much money as they used to transact on Ethereum L1. Like, go to Blockworks, look at the REV chart for Ethereum. It's like shocking. It's, down 90% from the highs, and it never really recovered. Solana captures most of the app revenue, most of the REV in crypto right now. And it's the same people that got Ethereum to this point are the ones still, steering the ship. Obviously, Vitalik has taken more of like a researchy role and maybe is less involved operationally, but like, you still have this very academic, cypherpunk ideals above all else type of pedigree, rather than maybe you could say the Solana like pragmatism, tech background type of folks. So it's all the same people. Like, it's and the same kind of matter that's going into this pivot. So it's not like you can say the different things and say that we want to scale the L1, but it doesn't seem like there's drastic enough changes in the types of folks involved and the types of folks building this thing to do that. Maybe you're right, Mert. Like, the saving grace could be network effects, but I have my doubts there as well.
Yeah, we'll see. But they do have that going for them, which I think would be unwise to ignore, because the EVM is also just easier to build on, just historical reasons. It's just been around for a little longer and it's just less intimidating. So if I were them, and by the way, what I find interesting is the point of a foundation or these types of entities is to just not exist over time. And it seems to be the complete opposite in this regard, where it's like, how can we make the foundation more of a central figure that makes more decisions and all this stuff? And I find that fascinating for a network that really claims to care too much or very much about decentralization. Because if that was happening on Solana, I would not be very happy. And that would seriously make me question things. So if I were them, actually, I'll give them some hints here. I would focus on the EVM, the liquidity network effects, and the developer network effects. Developers are what matter. And I don't think the developers have a first-class experience on EVM as much as they used to, because the tooling used to be just much better, but that gap is closing. And I think that gap is the most important thing right now, because once the developers start leaving, if they do, well, then you're just not going to be able to have any luck in any price, any revenue, any of these things. And so that's, it seems like that's somewhat prioritized due to like the hackathons and all this stuff, but that is really what you need to focus on, in my view, if you're Ethereum.
Over the years, we have seen a multitude of hacks, rugs, and bundled launches. The number one way that crypto traders can protect themselves and the wider community is through on-chain analysis, knowing who is moving funds and where those funds are going. Paired with their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. Arkham's exchange provides traders with the tooling and liquidity to take action in crypto markets based upon their on-chain observations, bringing them the world's first exchange powered by crypto intelligence. To get started, follow the link in the show notes below. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional password management. Follow the link in today's show notes to get started with Ledger today.
I want to talk about the Solana DEX landscape a little bit. That's just been a really interesting sector this year. I think if you go back 6-8 months, you had Jupiter. That was the DEX aggregator. No one could really compete with them. You had a number of DEXs that had been around for a little bit of time and no real new entrants. That's all starting to shift. We've seen multiple new aggregators come to Solana in recent months, so Jupiter has more competition. And the interesting announcement from last week that I want to get into is among Solana blockchain watchers over the past number of months, there was this interesting question of these shadow DEXs that had spun up and were getting incredibly good prices. One in particular called SolFi became, one of the most used sorts of DEXs for Jupiter's routing algorithm, I believe. There's other ones called like Obrick, another one that's escaping me right now. But last week we learned that SolFi was developed by Ellipsis Labs, some Solana DeFi OGs who developed an exchange called Phoenix and are working on an L2 called Atlas. I guess I'll just start generally. Mert, did you have a take on the public? I don't know what you knew behind the scenes, but the public disclosure, at least, that Ellipsis Labs was behind SolFi?
Yeah, I saw that. I don't think. I mean, I don't think I was aware. I had a pretty good guess, as in like it would certainly these two teams, one of these two teams. I wasn't sure which one. But like, who cares? It doesn't matter. But it's a really sweet demonstration of why blockchains are cool, because they just got that just by being better and without, like, they have a name. Jerry and Eugene are well known for being extremely intelligent and actually knowing what they're talking about and being good at finance and all this stuff. But they didn't even have to announce that. They just did it purely on meritocracy, which is, I mean, fundamentally, that's a really cool property of blockchains, which is if you just build a protocol that works, and in this case, it's better for some sort of price execution, you can just get market share. It doesn't matter where you're from, who you are, what your name is. If it just works better, then you can just do it. So I think that was pretty sweet. And certainly Solana DEX, or let's say DeFi in general, in my view, needs to get much more competitive. Like, there's a lot of things that are, I think, unideal. Jupiter having such a large market share is great for them. It's obviously not great for anybody else. It's the DEXs, you have Radium and Orca. I mean, that's great, but there needs to be more. The lending protocols, Camino, again, is great, and Margin is good, but there just, again, needs to be more, especially if your plan is to be NASDAQ. You just need to have the strongest DeFi talent in the world, coming on these chains. Like Aave is still probably the best borrow lend protocol. So like, why aren't they on Solana? And there's a lot of political reasons and all this stuff for that. But like, I mean, a good sign from last week was like 1inch, for example, came to Solana. Matcha and OX also came to Solana, and then Doodles, not a DeFi project, but still, these types of guys are coming more and more to Solana, and like you really need that for the NASDAQ thing to make sense. I tweeted about one of the other broken pieces of Solana, which is, well, I think crypto, but Solana too, which is the on-chain capital formation is just severely destroyed. Like, it just doesn't work. Like, no serious team is going to be like, I'm going to use this on-chain launchpad to launch my token, right? Because their options are meme coin launchpad types, where you'll just get bundled and sniped and sandwiched to death, which, like, for those people is generally an okay trade because they're looking for 100,000x on like 1% of all tokens ever launched, versus this is more like, okay, the price actually needs to hold up. There needs to be deep liquidity. There needs to be some long-term conviction and all this. And you should be able to do this in such a way where you don't have to give Binance 18% of your supply and market makers 20% of your supply, right?
Yeah, I was going to say, Mert, like,
doing that.
Is there a way for you to get rid of secret market maker deals? Because I think that's the other piece here.
Well, yeah, I mean, AMMs, right? Like a well-designed AMM with a good mechanism design. Like AMM, not to say the obvious, but like the MM in AMM is for market making. right? So like there is a solution for this in some regard. I think what needs to happen is like probably a hybrid approach, kind of like a hybrid liquid, where it's like decentralized in some ways in the back, not fully, but like there's a team that actually does a lot of the go-to-market and curation. And then provided you find PMS, because like otherwise you can't take on Binance. But then provided you this over a longer period of time, then you will have to decentralize for integrity of the network. And so I think that really needs to, and anyways, I won't reveal too much, but there are things being worked on to help with that.
Passive voice. Things are being worked on by people.
Yes.
Yeah.
So if you know any teams that are extremely high quality that want to launch a coin, and that you think they will, let's say, pass my skepticism bar, and there's really only going to be like one or two, then I would encourage you to get in touch.
Yeah, if there's any, RPC companies that run validators with a bald CEO that want to launch a token, we know where they can do it.
Yeah, probably not going to happen for a while.
But on the Ellipsis Labs SolFi question, I think the other thing you could say from it, from a bird's eye perspective, is it marks an interesting shift maybe away from AMMs. So to my very rudimentary understanding, automated market makers, they're cool because they allow for trading and price discovery without sort of like a dedicated market maker. So it uses a math equation to determine what the price should be. And then liquidity providers put up their capital. The issue with this is that liquidity providers can get picked off and suffer impermanent loss because like a centralized exchange will update the price faster than an AMM will, since it's captive to this like math equation. What SolFi is basically a proprietary sort of DEX where there's no front end for SolFi, as far as I understand. Like you can't go personally trade on it. And all the liquidity is protocol owned. So I guess Ellipsis is using its own liquidity to market make for like Jupiter rather than LPs putting up their capital. And that probably just long term works better because AMMs like are pretty bad for LPs. They're just pretty inefficient. Carlos from Blockworks has talked about this. I think Dan tweeted about it too. But like probably longer term, what you see is for meme coins and things, you still have AMMs because if I'm Ellipsis and I'm running SolFi, I don't want to be quoting prices on Fartcoin or well maybe Fartcoin, but the latest 1 million market cap coin. That's not profitable for me to like quote prices, but for more liquid pairs like stable coins to Sol, which I think is what SolFi does a lot of, that actually is worth it to me to market make for, and then I guess profit off the spread or that kind of thing. So this probably does mark like a sea change of just a more mature, more TradFi like ecosystem for Solana dexes, where they're running a lot of stuff in-house and it's sort of like a proprietary algorithm that they run to market make, which I think is interesting, probably better than what we have because AMMs are riddled with issues as they're currently conceived.
Yeah, there's a lot of issues with them. I think they'll always be around, of course, and I think there's more mechanisms to iterate on for AMMs. But I think like, yeah, there's a lot of just misconceptions around the profit. I mean, I remember I think when I introduced my brother to crypto, he found Orca, and he was like, "Oh man, you can get like 5,000 APY on this," and I'm like, "Oh fuck." And then like a few weeks after, he's like, "Dude, how come I'm not like actually making more money? What am I forgetting the money? Like where is it?" And I'm like, "Well, I don't really know how to explain this." But yeah, there's a lot of, but I think these problems, like I think with more iterations in time, they'll mostly go away over time. I think this is just a super new space.
Mm-hmm. Agreed. And I think it's good that like Jupiter, to not to call them out again, but I think it's good that they have competition now. I think it'll encourage Jupiter to quote better prices. And like, 1inch being on Solana means users have more options. It's funny because it seems like there's more DEX aggregators than actual DEXs now, with like 0x coming in, 1inch. Titan is one that I've written about. Like everyone wants to aggregate the DEXs. No one wants to create a DEX, maybe because it's like a better user experience to use a DEX aggregator than to just go to a DEX and trade. You get better prices on the aggregator, but I don't know where that goes long term. Like I wonder if all of these DEX aggregators can actually survive, or if one will kind of capture 80-90% of the market share. I would think Jupiter is the top dog today, but I wonder if the competition can meaningfully cut into their market share.
Yeah, I mean, certainly it can. I mean, we'll see, because Jupiter has plans to do their own chain, obviously. And so, it remains to be seen how much focus that would require. I mean, they have acquired a pretty large team. I mean, they must be the largest team on Solana for sure, but certainly one of the biggest in crypto as well. So we'll see how they manage that. I have no idea.
This episode is sponsored by Citrea. Citrea is the first zero-knowledge rollup to enhance the capabilities of Bitcoin block space, enabling Bitcoin applications and unlocking Bitcoin's full potential as a programmable financial platform. With Citrea, developers can now tap into Bitcoin's liquidity to build scalable payment systems, privacy solutions, and more. Citrea is currently in its testnet phase and is approaching its mainnet launch. To learn more about Citrea, follow the link in today's show notes.
Maybe to close out here, you tweeted a hot take this week and have alluded to it earlier in this pod that I wanted to talk about, where you said the most performant L1 will also be the most decentralized, which maybe is typically not how we think about the trade-offs between performance and decentralization. So why is it that you think that this is the case?
Right. Well, I actually think it's quite obvious. So perhaps I'm just really stupid, but I mean, the incentives. Okay, so blockchains, what are they? Or how do they work? Or why do they work? Well, they work because of the incentives, right? There's incentives. There's a game theory of, well, if you reward such and such people for such and such behaviors and punish them for such and such behaviors, then you don't actually have to trust any single one of them. You can trust the network. Okay, so it's an inherently incentive-based design. It doesn't work without that. Okay. However, for decentralization, people somehow completely forget the incentives, and I think this is largely a historical artifact of the triangle drawn on a blog post many years ago, known as the blockchain trilemma, which says performance and decentralization, for example, are, let's say, not synonymous without giving up something else. But I actually think it's the opposite. So, man, this would be great if I ever meet Peter Thiel and he's like, what's your one opinion nobody agrees with you on? Because the ideal answer is like, everybody thinks this, but it's actually the opposite of this. And I think this is one of them. And okay, so just do a thought experiment here. If you have a very accessible blockchain node requirements to run, like let's say you can just run it on your phone, but you get no money from doing it, right? There's no incentive for you to actually run it. There's already a lot of blockchains that do this, by the way, where a bunch of these L1s that are basically all dead, their node requirements are super accessible. You can just run them. Okay, so why don't people run those nodes? Well, they don't care. Why don't they care? Because multiple reasons. One is it's maybe not a good investment for the long term because the chain won't be around for too long. And maybe the reason is because it's not differentiated enough. And two is you don't generate income from doing it because there's no activity on the chain. And why is there no activity on the chain? Because it doesn't scale. Okay, so the only thing you're left with in that case is running a node based purely on vibes. Okay, you want to run a node just to say you run the node. Okay, now on Ethereum's case, well, one, you used to be able to make a lot of money doing this, but two, there's assets there to secure. So even if you're not making money from it, but you're an asset issuer, you would run a node regardless to help with security on your own end. So it's like a business line item on your expense sheet. Okay, so that makes sense. But other than that, it's just like, oh, I just run a node, right? Like even when people run like miners back in the day, why do they do it? Well, one is like it's cool, and you can just say you do it, but then 2 is you earn money from doing it. That's the whole incentive. Okay, so then how does the most performant lead to the most decentralized? Well, if you have the most performant chain, presumably you will have the most activity, right? Now, that has to hold true, by the way, right? So when I say the most performant will have the most decentralization, what that really means is the one with the most activity will have the most decentralization, of which performance is a necessary condition. And so, okay, so if you have the most performance and therefore the most activity, you then have the most revenue and fees. We're already seeing this today. Okay, we're already seeing this today on the blockchain, the Blockworks rev charts. Solana is the most performant, therefore it has the most revenue. Therefore, the validators make the most amount of income, right? So, for example, with Helios, when we first launched the validator, we didn't think we would make money from it because we just needed to support sending transactions because we're not a provider. Turns out, when priority fees went live, you make a lot of money from doing it. Okay, and then now you can see all these other DeFi teams spinning up validators, right? Like the Drifts of the world. And so what's important is over a long time horizon, let's say 5 to 10 years, as less activity happens on the non-performant chain, more and more nodes will drop off because they just have no incentive to stay or for new entrants to come in. On Solana or whatever the Performant L1 is, it's the opposite, where there's just money to be made in activity. So what you have an inherent incentive. And so when you say something like, well, the node cost on Solana is, let's say, 10 times higher than Ethereum. Okay, but what about the net income, right? Like it doesn't matter if the node costs $1,000 a month if you're making $1 million a year. And it also doesn't matter if the node costs $1 a month and you're making $0 a year. Okay, those things are not, nobody's just going to do it based on philanthropy or vibes. That's just not going to happen. And so that's basically just what that means. The only exception is there's a lot of these L1s, both in the past and currently, that actually get the performance due to capping the validator size, right? Like Sui and Aptos, for example, have roughly 100 nodes each. Say had like 29, 40, something like this, basically all in the same data center. Binance Smart Chain, all these different things, they're all very capped in node size. What Solana does that's like very, very different from everybody else that like not enough people appreciate is that it doesn't cap the node size, the amount of validators. So you can just add more validators to the nodes, validators to the network, and still get the same performance. And if that's the case, then you're both maxing performance and decentralization at the same time. That's never talked about, but that's arguably the most differentiated design in crypto today, right? Like the traditional wisdom is the more nodes you have, well, the more consensus overhead you have. As a result, the less performant you are. But Solana is designed in such a way where the additional nodes actually don't introduce that much overhead, provided you're above a certain threshold. So does that make sense?
That's a really interesting point. You should tell this to Peter Thiel. This doesn't like. How do you factor in something like Hyperliquid though? Because as you mentioned, like that, it's they cap their number of nodes. They're all co-located in Tokyo, and like to me, but they call themselves a layer one, which you can dispute, I guess, definitions. But like this argument maybe only applies to blockchains where the nodes aren't co-located and artificially capped, right? Because otherwise, you probably could sacrifice decentralization for greater performance.
Well, my claim is that the most performant, or let's say the most decentralized chain will be the most performant one. It's not that you can't have performance in any other way. Like for Hyperliquid, you can absolutely get a lot of performance by doing that, but you'll never be the most decentralized, which is fine. Like my claim isn't that you should be the most decentralized or it's good to do this and such. My claim is that from a physics perspective, if you just think about it, the most decentralized one has to be the one that's the most performant or has the most activity.
Yeah. Flipping the blockchain trilemma on its head, I guess. I have no further points, Mert. I think you covered that well, and I'm honestly convinced with some caveats, I suppose.
Sweet.
Well, I think we'll end it there, unless you have other Roundup items we didn't hit.
I don't think so. Just come to NYC Accelerate next week, May 19th to 23rd, something like this. So yeah.
Yeah, it seems like there's going to be tons of folks there. Live pod is happening. Would love to meet some of you in person. Come to our live podcast. I'm going to show that. Come to Permissionless in June. There will be another live pod, I believe, there. But yeah, thank you everyone for tuning in. Please like, subscribe, 5-star rate. Wherever you get your podcast, whatever the rating system is, give us the top marks because we think we deserve it. If you made it this far, thank you so much for listening. If you enjoyed, please share with a friend. And we will see you all again very soon.